The next step is to open up the report called the Adjusted Trial Balance. Most people call it the worksheet. So we're going to go to Reports, Accountant and Taxes, and it's the very first one, Adjusted Trial Balance. We're going to tab to the From field. That's the beginning of the month, 02/01/19. I'm going to tab to the To field. That's the end of the month, 02/28/19. I'm going to tab to refresh it. So notice this looks like a partial worksheet from our previous accounting courses. The first two columns are the unadjusted balances. So in other words, these are the trial balances before our adjustments. The next set of columns are the adjustments. So these are the adjustments that we just made in the previous videos. For example, if I double click on the $119.50 transaction, it opens up the quick report for design supplies. And then notice I had a check on 2/24 where we purchased some design supplies. And then here's the general journal entry, the adjusting entry in other words, that we entered in a previous video. If I double click on that, when the cursor turns into a magnifying glass, it will take us to the adjusting entry itself. So this should be familiar. And if I go back to the adjusted trial balance, your first question should be, well, how does QuickBooks know which transactions to include in the adjustments column? Well, let me go back to that Make General Journal Entries window. And notice this adjusting entry checkbox. If that is checked, then that means that this transaction will be included in that report as long as that report includes this date. So I'm going to go back to the adjusted trial balance. And then the last set of columns are our adjusted balances. So in other words, the balances after the adjustments. So remember, we had design supplies where they used to be $200. We did an adjustment and we found out that we used up $119.50. So we credited that account and it dropped the balance from $200 down to $80.50. Now notice this is a credit for 119.5. So we must have 119.5 debit, and here it is. Down at the bottom, design supplies expense. And you should recognize these other adjusting entries we did. Office supplies, we lowered the account by $175, which took the balance of office supplies from $400 down to $225. And we have the matching $175 debit down here on office supplies expense. We also have our adjustment for our prepaid advertising. We lowered it by $100, taking the balance from $600 down to $500. And we have the matching $100 advertising expense debit towards the bottom. We also lowered prepaid insurance by $200. That took the balance of prepaid insurance from $2,400 down to the proper amount of $2,200. And we have the $200 debit that matches up with that. That was debited to insurance expense. We have our accumulated depreciation credit, $100. And we have depreciation expense for the furniture, $100 debit. We also have a $60 accumulated depreciation on the computers. That's a credit. And then we have the matching debit of $60 for depreciation expense on the computers. We have interest payable, which increased with a credit. And then we have the matching $50 interest expense debit. So this is a very cool report because it shows the unadjusted balances, in other words, the balances before our adjustments. It shows the adjustments, and then it shows the adjusted balance, which are the balances after the adjustments. Now the only problem with this report is it's only available in the more expensive versions of QuickBooks. You're going to find out that in the real world, a lot of your clients will not have this expensive version of QuickBooks. So we will learn how to use another report in place of this. It's not quite as good, but you have to work with what you're given.